Hey there, traders. This is Taylor from the Trader's Brain, and welcome back to our Edge series. This is a special video today because I got a really interesting question from one of our subscribers around rotational context, and I thought putting a video together would make a lot more sense than me trying to answer in the comments section. So I thought it was a great question, and I'll answer it here. Now, this is just the normal stuff. Remember, the video is for educational purposes only. Take a look at the disclaimer. And if you want to learn about all the rest of the parts of this Edge that I use, you can visit the playlist here and take a look at the other videos. For those of you who have taken a look at the videos, you know that I use an approach called NADRO. It is a framework, and it starts with narrative and ends with order flow. And when it comes to rotational context, there's a couple of things that I look at to try to make sure that I'm taking the right kind of trades. I have trades for rotational context, and I have trades for trending or imbalance context. And narrative plays a huge role in that, but also developing value. And so I'll talk about both of those things in the context of that question. Here's the question. So really appreciate the subscriber. I think it's Chin Pang who sent this in. And he says, hello, would like to ask how could we identify rotational weekly context from early on? Because tend to lose in this kind of rotational context. If can identify early, then can only scalp or simply close the chart and wait for one time framing. So I really love this question. I don't know if I'm going to answer it precisely because they're asking about identifying a rotational weekly context, and I don't necessarily look at things at such a high time frame. So I'm going to address it with regards to kind of intraday. Like what do I look for from an intraday perspective to give me clues that we might be hitting a rotational day, and then therefore I might have to adjust some of the setups that I do. So let me just talk a little bit about what we mean by rotational context. So when you look at a day like this, like what's happening here is you just have price really being contained in, within the developing value area. So if you guys remember some of the tools, well, I'll talk about this in a second, but we have some tools that we look at, and price is just staying right here. It's just rotating back and forth. That's why we call it a rotational context. And so this can be a little tricky because, when price comes down here and it comes here, someone might think, oh, it's going to go all the way down here, and it doesn't, and it reverses, right? And so these can be sometimes very tricky because you get, range expansions that happen, this move up here and then down here, and you think, oh, it's going to keep going, and it doesn't. And so that's where people get thrown off a little bit. So how do I look at this stuff? Well, the very first thing is I look at my higher time frame narrative. Now, I didn't spend a lot of time in this series talking about this. This is some of the really proprietary aspects of NADRO that Merritt teaches at Apteros Trading. And so I didn't want to kind of infringe upon some of the work that he's done. But this is the view that I look at every single day going into my day. And so this is July 25th. And so if you go back and you look at July 25th, it was a very rotational day, very, very narrow channel. And so this is kind of what I saw coming into the morning. Okay. And just so you know, my setup when I'm looking at this stuff, this is a yearly chart over here on the left. Hang on, let me go back. This is a yearly chart. This is a quarterly chart right here. This is a monthly chart right here. This is my weekly chart, and this is my market profile right here. Okay. Now, I just want to draw your attention really to the weekly and the profile chart for a second. Okay. So when I was looking at the weekly chart, recognizing that this was a Monday, so there's not much I can glean in terms of how the weekly is developing. So what I'm using is kind of the prior week, which you can see that we've got kind of, this is the prior week's high, prior week's developing value area high. This is the prior week's VWAP. I don't really care about that, but there was some other references around here that were very strong references, that were very bullish references. Okay, and so I wanted to make sure that as I'm looking at this, that I have those references on here. And so what I'm looking at is I'm looking at a very strong reference, kind of right here, and another one right here, and price is just right in the middle of it, actually right up here at the top. So my expectation initially is that, okay, we have a couple of scenarios here. Okay, scenario one is we can move up here and retest that and go like that. Okay, that would be a bullish scenario. Scenario two would be that we come down here and we come back down and retest this area right here. That would be a bearish, but also rotational, right? We kind of look at this from a rotational perspective too, because we're already kind of up here and we're kind of coming back to a mean reversion type of play, right? That's not necessarily an imbalance, okay? So the other clue that I looked at is I'm looking at my market profile. So as you look at my market profile, this is a multi-day merge. I don't remember how many days, probably 3, maybe 2-3 days merge. And when you see overlapping value areas, you can merge them in Sierra Chart and other tools, and then you get kind of what's called a composite value area. Okay. And that's a pretty strong area. When you're trading within composite areas, it's a pretty strong area. Now I do also have one up here. It's older though, so it becomes less relevant. Just like this one down here, it's a little bit older. It's a little bit less relevant, right? But this is fresh. This is brand new, active. In fact, still building this. So knowing that I have this reference here, my weekly, and I have my stuff that transfers over. So this is the same gray line that you saw on the weekly. Okay, that's this one here, right? And then this one here, you see them over here. Okay, so that's that there and that's there. And so what do I have? Well, I have different references, completely different references that overlap my composite profile references, right? This composite profile high and this composite profile low, like that, these aren't related to these areas that were on my weekly chart. They just lined up that way. So these are very strong areas for me to pay attention to. And then when I looked at the overnight, and I noticed that the overnight, we're just, we attempted this move up, we're just trading down right here, right? To me, this looks like a very rotational kind of day, unless we can either break up to the upside, which if we do, we still have all this to contend with, or we break down to the downside where we'd kind of be meeting this right here. Okay. So my hypothesis for the day is, if we want to go long, we got to get up above here and accept above there. More than likely, we can see shorts going down this way. If we get down to here, we might see longs coming back up. Okay. So, but I do have this, because I'm short right here and long right here, I do have this rotational context idea for the day. Now, sometimes I make mistakes. So, and we're going to go back and look at what happened on July 25th, but that's one way that I look at it. And it looked to me very clearly like it was going to be a rotational day. So then we come into, July 26th, which is the very next day. And what do we see? Well, we see this flat weekly developing value area. We see this another day added to the composite profile. Gives you a clue what happened on July 25th, right? And so, and then we kind of have this flattening out over here on the monthly chart. Okay. So, as I'm looking at this, I'm like all in on rotational day. I'm like, this is absolutely going to be a rotational day. Like we're probably just going to bounce from here, maybe come up to here and then down to here. This is absolutely slam dunk rotational day. In fact, I even wrote in my pre-market expect more rotational conditions today as we go into headlines. This is the day before the July 27th FOMC rate announcement. So I'm thinking, oh, we're going to have a flat market. It's going to be quiet. Nothing's going to happen. We're going to FOMC. We have all this flat, flat behavior. Okay. And that is absolutely not what happened. So you're looking at the higher time frame gives me really good clues and indications. And it gives me, what I do with it is I create these hypotheses, right? So these are my hypos here. This chart right here, this whole thing is my hypo chart, and it tells me I at least kind of position myself with some if-then statements. If it goes to here, then I'm looking for this. If it does this, so I'm somewhat prepared for what may happen or what may not happen. Okay, and I always expect going into something. I may put on my pre-market. I'm pretty sure it's going to be a rotational day, but I don't just use that because anything can happen. Anything can happen in the markets. And so we see that over and over again. And so this is where developing value comes in. So where the higher time frame analysis gives me kind of a general direction, somewhat of a bias, prone to, potential error, on my part, or sudden changes in the market dynamics, right? Developing value helps me during the day to make sure that I'm on the right side, or I'm aligned to some sort of rotational context. Now, if you go back and watch the tutorial video on developing value, you remember that there are two main tools that I use for looking at how value develops during the intraday. I use VWAP and this RSI with trend, which is basically a moving average crossover tool. Okay, so it's 3 moving averages, and it's obviously green for up, red for down, and gray for it's still, it's transitioning, potentially transitioning. And I found the combination of these two to be really effective, especially for early on rotational days, especially the RSI with trend. Okay, so the RSI with trend is really helpful to me on rotational days. So let's take a look at July 25th. Okay, and pretend you don't see the whole day, right? Use your imagination that you can't see the entire day. But when we start out, first of all, we have this area here and this area here. These are our broader weekly kind of main lines in the sand. We have price that opens up. This is VWAP with our standard deviations, okay? And price opens up. Here's our upper standard deviation, lower standard deviation. Price comes in, and we trade just basically within the VWAP zone, okay? We're just basically going back and forth around VWAP. So I already know from my VWAP tool that we're not going anywhere. I'm not trading anywhere in here in the middle. I might trade, if price did something like this where, it came up to here and then price worked itself up and then came up to here, come up here. I might trade that, kind of anticipating a kind of a bigger breakout, but maybe not, right? So that didn't happen. The other thing that is super helpful, so notice what the RSI with trend is doing, okay? So let me just point this out. It's red here, and then it's gray here, and then it's green here, and then it's red here. Like within the matter of, I don't know how long, we've had, 1, 2, 3 condition changes in a very short period of time. That is a loud clue for me. When we're trading flat within VWAP and I've got multiple RSI with trend changes, I'm not touching this from an imbalance perspective. This is absolutely, until we actually see some real force and movement away from this zone, this is just a range. This is just a rotational day, and I don't want anything to do with it. So I find that the RSI with trend tool, when I get these kind of really changes and moves around VWAP, like I'm just not interested at all. So this was a really good clue. And notice, when I was kind of marking my best trades, kind of after the day is where I do a little armchair quarterbacking. I look at, how I did, and then ideally what I should have done. Most of my trades here are at edges. Okay. So edges, where are my edges of value? Okay. And that's how you want to trade rotational days. This one is actually a trade I took right here. Thinking, oh, maybe we're breaking up. We formed a new high up here. We came down, looked like bears were stalling out. Took that, didn't work out so well, right? Still very strong rotational day. You get slapped back. Now, July 26th, remember how I said like, oh, that one looks so awesomely rotational. Not at all. So when you look at this and we kind of, we open up, I'm trying to figure out where we open. Oh yeah. So we open up right here. This is the market open right here. So a couple things. Look how far away we are from this RSI with trend. We're pretty far. Like in order for that to turn green, this really has to shoot up, right? So this is red. It's not green and it hasn't shot up. Second thing is we're not trading back and forth within VWAP, right? We're not kind of doing this kind of stuff. This is a very slow, ugly, back and forth trend with lots of stop runs and all that kind of stuff. But it is trending down, and notice the difference, right? Notice the difference between this and this, right? By and large, we're trying to hold to this lower VWAP 2 standard deviation edge right here. We're poking up above it, and that makes for some really tricky trading. But by and large, we're trying to stay below that. Okay. Now let's say that you're not sure, right? Okay. Well, you're not sure. So, maybe you take, this extension down here, or this one here, right? Maybe you skip this and you skip all this stuff right here because you're not sure. Maybe, you think, well, maybe this is coming back up, right? Possibly. Maybe this is coming back up, possibly. But by the time price gets down here, right? Aren't you pretty sure that, this is not a rotational day? So yeah, can you take something like that? Sure. If it comes back up to here, sure. You're still bearish. You haven't even touched VWAP yet, right? Can you take something like that? Sure. Now let's say that you're still not sure through all of this. Okay. Well, by the time this does this, right, you're absolutely sure. So when it comes back up to here, yeah, you can take that, probably scale out a little bit, make a little bit there. Could you take this up here? Yeah, probably. You still haven't tapped VWAP. You're just testing back to VWAP, testing that here. So, or you could sit out, right? And you can just sit out and recognize it's not really the kind of trend day that you want to trade, but it's certainly not a rotational day, right? That's the point. So those are really the two big tools that I use. And so early on, a lot of times I can see when rotation is developing. The higher time frame charts, they give me that bias. Sometimes I'm right, sometimes I'm wrong, but I'm always approaching the day, with that in mind and with flexible scenarios in mind, right? Being flexible to say, okay, hey, this isn't developing the way that I originally thought it might, and that's okay. It's developing this other way, and there are trade opportunities there as well. And that's why developing value is so important, is because it gives us an idea of what's happening during the day, despite what we may have looked at and done in our pre-market with our higher time frame analysis work. So that's it. That's what I do. That's how I look for early rotational days. If we're smack in the middle of VWAP and developing value area, and we have an RSI with trend or moving average crossover tool, or anything else that you want to use that's similar, that is going back and forth, it's a rotational day. And you can just kind of deal with that appropriately by taking the right trades for a rotational day. That's all I got, traders. Until next time, happy trading.